Hello everyone and welcome to my channel. In today's video, we're going to take an in-depth look at the key differences between stocks and shares. If you're new to investing or just looking to expand your knowledge, this video is for you. We'll cover everything from ownership and valuation to voting rights and trading, so let's dive in. Stocks and shares are two of the most commonly used terms in investing, but they are often used interchangeably. The reality is that they have different meanings and are used in different contexts. So, let's begin with the basics. What are stocks? A stock represents a unit of ownership in a company. When a company goes public, it may issue stocks to the public to raise capital. When you buy a stock, you become a shareholder in the company. As a shareholder, you have a claim to a portion of the company's assets and earnings, and you may also have voting rights on certain company decisions. Stocks may be issued in large increments, such as 100 shares or more, and are typically traded on a stock exchange such as the New York Stock Exchange or Nasdaq. The price of a stock may fluctuate based on a variety of factors, such as the company's performance, market conditions, and investor sentiment. What are shares? Shares represent a specific unit of ownership in a company. For example, if a company has 1,000 shares outstanding and you own 100 shares, you own 10% of the company. Shares may be issued in smaller increments than stocks, and may be priced differently based on the company's valuation. Shares may be traded on smaller exchanges, or may be bought and sold privately between individuals. Unlike stocks, shares may not have voting rights, and may not provide the same level of ownership in the company's assets and earnings. Differences between stocks and shares. So, what are the key differences between stocks and shares? Here are a few. 1. Ownership. The most significant difference between stocks and shares is the level of ownership they represent in a company. Stocks represent ownership in a company's assets and earnings, while shares represent ownership in a specific unit of the company. 1. Trading. Stocks are typically traded on a stock exchange, while shares may be traded privately or on smaller exchanges. This means that stocks may be more accessible to the average investor, while shares may be more difficult to acquire. 1. Voting rights. Shareholders may have voting rights on certain company decisions, such as electing members to the board of directors or approving major company actions. However, shareholders of shares may not have the same level of voting rights. 1. Valuation. Stocks and shares may be priced differently based on the company's valuation and other factors. Stocks may be valued based on a variety of factors, such as the company's earnings, assets, and market conditions. Shares may be valued differently based on the number of shares outstanding, the company's current assets, and other factors. Benefits and risks of investing in stocks and shares. Both stocks and shares can provide opportunities for growth and income, but they also come with risks. Some of the benefits and risks of investing in stocks and shares include: benefits of investing in stocks and shares. 1. Potential for growth. Both stocks and shares may increase in value over time, providing opportunities for capital appreciation. 1. Income. Stocks and shares may also provide income in the form of dividends or other distributions. This income can be reinvested or used for other purposes. 1. Diversification. Investing in a variety of stocks and shares can help diversify your portfolio, reducing overall risk. This can help protect your investment against market downturns and other risks. Risks of investing in stocks and shares.